Basically, I'm going to talk about a very old Indian tale, actually, most of us probably grew up with. It's a tale about the invention of the game of chess. So, the game of chess was invented about 1400 years ago, 70 score and 4 years ago. This guy who invented the game, when he showed it to the king immediately became a big chess fan and was playing all the time. And so he told the inventor of the game that, ask for any reward and it shall be yours. So the inventor says that what I want is I want you to put 1 grain of rice on the first square of the chessboard, and I want you to put 2 grains of rice on the second board of the chessboard, and I want you to put 4 grains on the third square, and keep doubling the grains on every square. Just when you get to the 64th square, then that is the amount of rice I'd like, and that's all I want. Of course, the king thought that this was a very stupid request. And he said, I want to give you such a big reward, and this is all you want, a bunch of rice. So he told his treasurer, measure out the rice this guy needs and get him out of my court. About a week went by, and the guy hadn't figured it out yet. So he called the treasurer back in and said, why are you taking so much time? He said, well, it took me a while to run the calculation, and it turns out that we don't have the rice. Not only do we don't have it in our granary, we don't have it in the kingdom. And not only do we not have it in the kingdom, it doesn't exist on planet Earth. That is the power of compounding. So if you took that amount of rice, which is going from 1, 2, 4, 8, 16, and so on, we have a bunch of people who are going to IIT soon. So how many grains of rice on their chessboard? Anyone raise their hands? Over here? No? Accidental raising of the hand? Anyone? Yeah, go ahead. 2 to the power 64 minus 1. Okay, I won't ask you to lay out the whole number. So if you calculate that amount of rice in terms of present rice prices, it works out to $300 trillion. And of course, 300 trillion is a big, big number. The entire net worth of every man, woman, and child in the United States is 70 trillion. And the entire net worth of every man, woman, and child on the entire planet is just about 300 trillion. So basically, what the guy asked for would be pretty much the entire wealth of the planet. That is the power of compounding. And that is why Einstein calls it the eighth wonder of the world. This story of chess that I told you is something I'm sure most of you have already heard before. In fact, I heard about it when I was a kid. In 1994, I was 30 years old, and I heard about Warren Buffett for the first time. When I heard of Warren, I had really no knowledge of investments or capital allocation or any of those things. What I was lucky about in 94 was the first couple of biographies of Buffett had just come out at the time. And so I could look at this track record that Warren Buffett had from 1950 to 1993. It was a 44-year track record. Over that 44-year period, he had compounded money at 31% a year. If you compound money at 31% a year, and I'll show you later, if you compound money at 26% a year, it will double every 3 years. 1.26 times 1.26 times 1.26 is 2. And if you're compounding at 31% a year, you will double your money in little less than 3 years, maybe 2.5 years or 2.6 years or something. When Warren Buffett for 44 years had compounded at 31%, he was already on the 18th square of the chessboard when I first heard about it, because he had compounded. And so, I thought back to the story about the chess and the rice and so on, and talked to Warren. And I said, wow, this guy is actually playing out that chessboard story. That story is very powerful, because if you keep doing it, and if he keeps doing it, he's going to become the wealthiest person on the planet. and he became the wealthiest person on the planet. So it works. But when I was thinking about all these things, like I said, I've never been to business school and really hadn't thought much about investments. A few things kind of stood out to me. Basically, the investing world, hardly anyone followed Warren Buffett and his approach to investing in 1994 and even today. Hardly anyone had the returns that he had. So the investing professionals, if you will, did not follow Warren's approach to investing and did not have the results that Warren Buffett had. And I thought those two facts were cause and effect. I thought that the Buffett approach was the approach to kind of highlight high rates of compounding. And if you didn't follow that approach, you were basically not going to go anywhere. And so I had these thoughts that these things were related. Buffett's approach looked replicatable, and no one was replicating. So I said, I like this compounding. I like this 26% or 31% a year, and why don't I give it a try?